what are the various types of organizations in the insurance industry? Then in insurance industry, we always talk about the insurer and the insured. Insurer is the insurance company, insured is the policy holder. But there are so many other people who are playing very important roles in the insurance industry. Who are they? Agents. You want to become an agent, and the agent is the most important link between the insurer and the insured. Right from the day of the proposal, when the customer gave an application for insurance, to the last day when the claim under the policy is going to be paid, the agent will have to play a very important role in the life of the policy. He has to always be in constant touch with the customers and see that their grievances are taken care of right at his stage. They should not go to the company, they should not go to IRDA. So agent has a, generally salesmen are responsible only for sales, but insurance salesmen are not simply salesmen. They have to take care of sales also, service also. That is why life insurance agents are called advisors. They are not simply salesmen, they are responsible for sales also, service also. Then we have corporate agents. Corporate agents means an institution will take up an agency. Instead of an individual taking up an agency from an insurance company, if an institution, if a company takes up an agency, that is a corporate agent. If bank is selling policies on behalf of the insurance company, bank is a corporate agent. It is an institution which is working like an agent for us. Then intermediaries. Intermediaries means agents, brokers, all the people sell the policies or who are instrumental in selling the policies. These are the intermediaries. Underwriters. Underwriters are very important people. When you are giving a policy covering risk, many unscrupulous people who are already seriously ill may try to hide their disease and take a policy. We cannot give policies to such people. At the time of issuing the policy, customer should be okay, and then if something goes wrong, we are prepared to pay. But we don't want to insure a person who is now on as the deathbed. So who will take care of this aspect? Underwriters. Underwriters are employees in the insurance company. They examine the application of the life insurance policy called the proposal. They examine the medical examiner's report, the height, weight, everything, family history, personal history, and they decide whether the policy is to be issued or not. Are we undertaking risk on his life or not? And if we are undertaking, can we give the policy on normal rates or we have to charge some extra rates? For example, you are insuring a person, a driver, a truck driver who has to go on hot roads and all that. We will give a policy, but we say, sir, we charge you a little extra premium because there is some extra risk in your life, we are charging a little extra. So underwriter is a person who will decide whether a proposal has to be accepted or not, and if it is to be accepted, whether any extra premium is necessary or it is not necessary. Then we have the actuaries. An actuary is the most important person in a life insurance company, more important than even the managing director. Who is this actuary and what does he do? He has his role in almost every department of a life insurance company. But the most important duties of his are, number one, preparation of premium tables. How much? Because premium will increase with age. Premiums will decrease with the term. As the term increases, the premium decreases. All these things will have to be taken care of by the actuary. And he prepares a table for each product. Endowment policy, age, term. If a 20-year-old man wants to take a 15-year policy for 1 lakh, what is the premium he has to pay? This will be calculated by actuaries. Actually, actuarial science. Actuarial science is a science based on maths. So actuary is a very important person. That is his main responsibility, but he also takes care of the valuation. Valuation means for all other companies, 31st March, you prepare a profit and loss account and the balance sheet. You know whether you are getting profit or not. But life insurance companies, you will not know. Why? Because you have issued policies which are going to run for 15 years, 20 years, 25 years. And how the death rate is going to be in the years to come, we do not know. How the interest rates are to vary, we do not know. So we are taking a big risk. So every year we have to do the valuation and see whether we are okay or not. how much money we are supposed to have with us to pay all the future claims. If we are having, we are solvent. So that is the main job done by an actuary. Then we have the TPAs, third party administrators. These we come across in health insurance. Health insurance, insurer, insured are there. Insurance company is giving the health insurance policy, a policy holder has taken the policy. These are the two parties to the contract. A third party is the TPA, third party administrator. He finalizes the lists of hospitals which are approved by us. If you want to take a Mediclaim policy and if you are to be treated, you cannot go to any Tom, Dick and Harry for treatment. You have to go to one of the approved hospitals. That list is prepared and maintained by the TPAs. Number 2, in Mediclaim policies, there are two systems. You join the hospital, you take the treatment, you pay the bill, then you seek reimbursement from the insurance company. But it's not possible for all people. For example, I have to pay a bill for 2 lakhs. I don't have 2 lakhs with me. So there is also a cashless facility. You can just join a hospital without paying 1 rupee. And the company, of course, has to say that you treat him, we will pay the bill. That approval, that's called a cashless policy, and the approval, without the approval, hospitals will not take you. And the TPAs will take care of that. And finally, when the customer is discharged in the hospital and the bills are to be paid, they assist in settling the bills of the hospitals by the insurance companies. So they are to be found in health insurance policies. Then surveyors or loss adjusters. A customer claims that his house is burnt. Is it really burnt or is it a fake claim? So just because he applies for a claim, we are not going to pay. We will ask the surveyor or the loss adjuster to go and visit it. So he will go and see the property which is supposed to have been burnt, and he will decide, he will certify that the loss has really occurred, and he will also certify, he will assess the loss. Customers will naturally try to claim more amount than the actual loss, and the surveyor will say, no, this loss is only 20 lakhs, not 30 lakhs he is claiming. So that is the role of the surveyors. Then the regulator, we have seen already, IRDA is the regulator for life insurance companies and general insurance companies. They give licenses to the companies and they issue a number of regulations from time to time. They see that companies function effectively and that the customers are getting their due. Then training institutes. Insurance companies, of all companies, they require trained personnel. For other companies, for banks, there may not be much need for such a training, but life insurance companies, because we handle long-term contracts and all that, we require people who are trained. For that, a number of institutes are there, but we will talk about only 3 major institutions. First is the Insurance Institute of India, III, it's called a III in Mumbai. Insurance Institute of India is there in Mumbai. They conduct a lot of examinations like the licensure examination, associateship examination and fellowship examination, both in the life branches and the general branch, and they are supplying trained personnel to the insurance companies. The other institute, IIRM stands for Institute of Insurance and Risk Management. It is in Hyderabad. It is founded jointly by the government of Andhra Pradesh and IRDA. They are also running courses to produce trained personnel for the insurance companies. Lastly, in Pune, there is one National Insurance Academy. So existing officers and staff members will be sent there for training periodically. So these 3 institutes are supplying trained personnel to the insurance companies. Lastly, NGOs, non-governmental organizations. What are these non-governmental organizations? These are private organizations which have generally 2 ends in view. First, they want to spread awareness of insurance among the people. They want to spread awareness how insurance is very important, how everyone should insure his life, how much and all these things. They spread awareness about life insurance and general insurance also. They also see that the customer gets his due. If the customer's interests are at stake, the NGOs will take up those issues and fight with the insurance companies. So these are the various actors who play a role in the insurance industry. Now, how to market insurance? When I say insurance, I am talking about life insurance also, general insurance also. How to market insurance? There are two systems: direct marketing channels, indirect marketing channels. What are the direct marketing channels? Direct marketing channels means agents will have no role in selling the policies. The company will directly issue advertisements either through the TV or through the newspapers or through hoardings, and customers will reply. They may make a call or they may write, and the administrative staff of the insurance companies will answer all the queries, will give all the necessary clarifications, and then in due course the contract is finalized without the instance of an agent. So, because we are able to sell a policy directly and not through an agent, the agent's commission is saved. As I told you already, agent's commission is passed on to the customer by way of a reduction in the premium. And online policies also, they come under this, direct policies. Online policies also directly the customer applies to the company and he gets the policy. Here also the intermediary is not there, his commission is saved and passed on to the customer by way of reduction in the premium. Then what are the indirect marketing channels? This is the conventional system of selling life insurance. Indirect marketing means we sell policies through agents, through corporate agents, through brokers. Brokers means they also sell policies, but agents can sell policies of one company only, whereas brokers can sell the policies of a number of companies. So, these two are the differences. So, all these together are known as intermediaries. So, indirect marketing channels means we are selling through agents, we are selling through brokers, we are selling through banks, bank assurance. All these things are the conventional way of selling policies, because generally you have to approach the customer and persuade him to take the policy. Customers in modern days are having the insurance consciousness, so they themselves are approaching. But normally an agent has to approach the customer and see that he realizes his need and he takes a policy. What are the various insurance products? Insurance, as we have seen already, life insurance is there, non-life insurance is there, and reinsurance also is there. So, life insurance covers risks related to human lives. All other risks are covered under non-life insurance or general insurance policies. Now, non-life insurance companies, what type of policies they are selling? We shall just have a look. They generate, all their business is mainly classified into fire insurance, marine insurance relating to ships, and miscellaneous insurance. Miscellaneous insurance, it covers a number of insurances like motor insurance, health insurance, property insurance, liability insurance, travel insurance, etc., etc. So, these are the various products of the non-life insurance market. Life insurance market we are supposed to study more detailedly, because we are not here to study the general insurance market in a detailed manner. So, I just mentioned the branches there. Life insurance products are there. What are they? Term assurance plans. I have told you already. Term assurance policy, it gives pure protection to the customer. If you take a term assurance policy for a company and pay for 20 years, if something happens to you during the 20 years, sum assured is paid to the customer's family. But if nothing happens, nothing is paid at the end of the policy. Some people think it is a loss. So, the premium is wasted. No, it is not like that, because protection, if you want protection, you have to pay for it. If you want to engage a security guard or a bodyguard, you have to pay him. So, insurance company is giving you protection. Don't worry, sir, if something happens to you, we will pay so many lakhs to your family. For that you have to pay. And the second thing is, the premiums are not swallowed by the company. The premiums are all passed on to a pool, a risk pool. And not all the people who take the policies will die during the term. Only a few will die. Our experience is about 25% policies are becoming death claims, and 75% of the policies are become maturity claims. And those who die during the term are paid from the risk pool. they are fully compensated from the risk pool. These are the term assurance policies. Endowment policies have been very popular in India for a very long time, because they are taking care of the twin perils of life insurance. What are the two perils of life insurance? The danger of dying too early and the danger of living too long. Danger of dying too early means family protection payment is made. Living too long means living after retirement, living after your income has stopped. You require a retirement income. So endowment policy is taking care of family protection also, retirement income also. That is why it is very popular among most of the policy holders. Both the twin perils of life insurance are covered under one policy. Then the whole life plan is there, which takes care of your insurance all through your life, because it is a long term policy, and it costs a little less than the endowment policy. Endowment policy, they have to pay you earlier at the end of 15 years or 20 years. So endowment policy may be slightly costlier, whole life policy may be slightly cheaper. Then pension and saving plans, these are sometimes known as annuities. Annuities are they take care of your retirement income, because all people are not in pensionable jobs. Very few people are having pensionable jobs, and all your PF and gratuity and all these things are spent in no time, and you are there with no money in your hands. That should not happen to you. So if you take a pension plan as though you are a pensioner, the insurance company will pay you a pension as long as you live. Lastly, ULIPs, unit linked insurance plans. These are nothing but insurance and investment. Insurance and investment. Investment, you can directly invest in a company, but then investment is not everybody's cup of tea. Investment is a difficult subject. Even experts are often baffled. So better you go with an insurance company, because they have huge investments, and they also diversify their investments. They don't invest all their money in one company. They invest these monies in thousands of companies, so that even if one company fails, we don't lose. So that is what is called diversification, and the golden rule of investment is, do not keep all your eggs in one basket. Do not keep all your money in one company. So if you invest through life insurance company, the amount is invested in a number of companies. Even if one company fails, nobody is going to lose. These are the ULIPs, which combine insurance with the investment. Now, role and functions of an agent. You are an agent. What is your role? And what are your functions? The role, as you know, is to sell policies and to take care of their servicing also, because from time to time, when the customer married, he was a bachelor, he named his mother as the nominee. Now he is married, so the nomination may have to be changed, or you may advise him to take another policy for his wife. The address may change. So many, because it's a long journey. A policy is a 20-year affair or a 15-year affair, and you have to stand by, and it's a technical matter. All customers, even highly educated people, don't know much about life insurance. So you are the professional. You have to guide him throughout the long journey. So you must require a license. You have to take a license. You have to pass the examination first. Then they will give you a license. That license will have to be renewed every 3 years or so. So you should hold the license, and you should know the regulations which relate to the customer care and all these things, and you must abide by the regulations. Only then you will be a success. Insurance agent acts as the main link between the insurance company and the insured. Their role is to recommend to clients the right products that address the client's needs. Insurance agent acts in the interest of the insurance company by using their unique position of knowing their clients well enough to protect the insurance company from any undue adverse product selection. Undue adverse selection means some people who are already having a serious disease, they hide it and like to take a policy. That should not happen, because you are the agent of the customer also, you are the agent of the company also. You must see that both the interests of both the people are taken care of. Once licensed and appointed, the agent is an independent professional. You should not think that you are a slave of the insurance company. You are an independent professional. You should take care of the interests of the company also, of the customer also. Now, after IRDA came in the year 2000, they formed a code of conduct for agents. Code of conduct is nothing but some do's and don'ts. You should do this, you should not do that. A number of points are there. For example, when you address a customer, you should say clearly who you are and from which company you are coming. And you should also tell him all about the product. Don't hide any facts. Disclose everything correctly and sell the policy, because it will last for all time. Then agent should disclose all information relating to the insurance company that they represent and the products they are recommending, should act in the best interest of the client while at the same time making sure that there is no adverse selection against the insurance company. Agent needs to take steps to keep the business they have secured for their company. That is what is called conservation. At one time the figures was, if 100 policies are issued in this year, by the end of the year 30% are discontinued. 30% of the policies are lapsing. That should not happen, because the agent has not guided them properly. So you should see that the business is conserved. It stays on the books of the company. An agent need to ensure that the policy holder pays the premium within the required time. Actually, if you don't pay the premium on or before the due date, or at least within the days of grace, the contract will lapse. That so many agents don't know also. The contract lapses, if the contract is not in force and the customer dies, full amount will not be paid to the family. In some cases, a very small amount may be paid. In some cases, not 1 rupee may be paid. You have to impress upon the customers the need for paying the premium in time and see that the policy does not lapse. It should be in force. All this is your responsibility as an agent. So we have come to the end of the chapter. We shall see what we have learned in this chapter. Summary, a summary of what all we have discussed very briefly. I shall read. What is insurance and its need? We have seen the definition for insurance and why people need life insurance or general insurance. How does insurance work? We have also seen how the insurance companies are able to work. They collect premium from all people exposed to the same risk. They keep it in a risk pool. Only some people will face the loss and they are compensated from the risk pool. That is how the companies will work. We have seen the role of a financial services sector, especially insurance. What is the role played by the financial services sector to the country, to the individual and to the customers. Then benefits of a professional insurance market. If you are a professional agent, what are the advantages to you, to the customer and to the country in general? Then we have also seen a brief history of insurance, how the insurance industry started in India, how it progressed and at what stage it stands today. Then we have also seen some recent developments in the insurance industry, like bank assurance, increased use of IT, etc., etc. That also we have seen. Then roles in the insurance industry. We have discussed a number of people who play important roles in the insurance industry, like the actuary, the agent and all these people. Then we have seen how insurance is distributed or how insurance is sold, how it is marketed. That also we have seen. Then we have discussed very briefly some insurance products. There are of course so many products, but we have briefly discussed the more important products. What are the detailed products and all that we shall see in a later lesson. Then we have seen how the life insurance market is and how the non-life insurance market is. Lastly, we have also seen what is your role of an agent and what are the functions of an agent. From chapter 1, some important questions are there. We shall see what are the questions and what are the answers and why that is the correct answer. Mr. Gupta is an insurance expert who has a rich experience in determining premium levels per product. What is his profile like? Is he an actuary or a loss adjuster or a risk manager or an underwriter? We have already seen that. An actuary is the person who calculates the premiums and all that. So the answer is A, actuary is correct. He is the person who prepares the. Then, who is the customer of a reinsurer? The customer of an insurance company are the policy holders. Who are the customers of a reinsurance company? Is it a high net worth individual, or insurance companies, or licensed insurance agents, or non-government organization? Insurance companies are their customers, because when an insurance company issues a big policy, they go to the reinsurance company and ask them to bear part of the risk. So, no individual will go to a reinsurance company. Individual goes to an insurance company goes to the reinsurance company. So, the customers of a reinsurance company are the insurance companies. What is the main objective of taking the life insurance policy? There are many advantages in taking a life insurance policy, but what is the most important one? Is it tax benefit? Is it savings? Is it investment? Is it protection? Protection is most important. Family protection comes number one. Then investment, savings, tax benefit, all these things are there. Tax benefits, if I may briefly say now, according to section 80C of the of the Income Tax Act 1961, up to 1 lakh premium paid by you will rank for deduction from the taxable income. If your taxable income is 3 lakhs and you are paying 1 lakh premium, that 1 lakh will be deducted from the 3 lakhs and you will be taxed only for 2 lakhs. That is a good advantage. That is the tax benefit. There is another tax benefit available under section 1010D. That is, when a policy matures and you get some 3 lakhs or 4 lakhs, that will not be treated as your income, and you will not be taxed. Income tax will not be levied on the sum assured, whether it is a death claim or a maturity claim. So, up to premium of 1 lakh paid, the sum assured also is tax free. If you are paying 2 lakhs of premium, the policy is issued for the first lakh of premium or tax free, but you have to pay tax for the other thing. Also, there is another condition, an important condition. That condition is, supposing I have taken a policy for 1 crore or 1 lakh, I have taken a policy for 1 lakh and my premium is 25,000 a year, 25,000 rupees a year. So, I am paying 25% of the sum assured as premium. They will not give me any tax rebate, because this is more for investment than insurance. They can take care of family protection, but they will not take care of all your investments. So, one rule which has to be followed is, if the premium is 20%, it should be less than 20% or 20%. Only then you will get that rebate under 80C or the tax free concession under 1010D. If you want to take a short term policy and the premium happens to be more than 20% of the sum assured, you are not entitled to these insurance benefits. So, protection is the first. What is the maximum sum assured under a micro insurance policy? We were discussing about a micro insurance policy, and we thought that for people, the 50,000 is the minimum sum assured for the policies issued by most regular companies, but that is also beyond the reach of people below the poverty line. For them, we are selling micro insurance. There, the sum assured can be as low as 5,000. I said already. The maximum sum assured is only 50,000, because above 50,000, you go to a regular company. If you can afford to take a policy for 50,000, you go straight to an insurance company. It is only for people who cannot afford to pay higher premium that we have the micro insurance. So, 50,000 is the answer. Arun wishes to pursue a career in insurance and wishes to be in a department which calculates the level of premium. In which department should he join? Already we have seen that premium calculation is the job of an actuary. So, if Arun wants to join a department which calculates the premiums, he should go to the actuarial department and become an actuary. Actuary is the right answer. Insurance agents are there who work only for insurance company, who work for customers, intermediaries, who work for their own interest. C is correct, intermediaries. They are the intermediaries between the insurer and the insured, between the company and the customers. If a client wants to compare between all financial products, then the best person he can approach is individual agent, corporate agent, bank, broker. Broker is the answer. Why broker is the answer? An insurance agent can work only for one company. An insurance agent can work only for one company, whereas a broker can work for any number of companies. Because he works for a number of companies, he knows all the products of the companies, and if you want any comparison between various companies' products, only a broker is in a position to explain that correctly, not an ordinary agent. Then the main purpose of buying an insurance policy normally is to develop the habit of savings, to obtain income tax benefits, for protection of financial security, to obtain loan as and when required to meet financial obligations. C is the answer. As we have seen already in an earlier question, family protection is the number one reason why one should take a policy. So, protection of financial security comes, it gets the top priority position. That is the main reason why a person is taking a policy. Other things are there like savings and tax saving, all these things. The basic elements of life insurance are accident benefit and riders, pension and monthly income, death cover and maturity benefit, interest yield and variable income. C is correct. Death cover and maturity benefit. I told you that the endowment policy is very popular because it is taking care of the main two perils of life insurance, which are family protection, retirement income. So, death cover, maturity benefit, these two are the basic elements of life insurance. Mixing these in various proportions, they have designed so many policies, but these two are the prime elements of any life insurance policy. A professional insurance market carries. What does a professional insurance market do? Is it need based selling? Is it product based selling? Is it commission based selling? Is it company based selling? We have already seen that a professional market has to take care of the customer. Customer should get top priority. Need based selling, you have to sell a policy which meets his needs. So, need based selling is the right answer. The timing of death is uncertain. So, when one should take life insurance? Is it at the time of uncertainty, at an early age, any time in life, at the time when advisor takes the decision? At an early age, because uncertainty is there all through life. You cannot afford to waste 1 minute. So, at a very early age, you have to take the policy. Don't postpone taking the policy to a later date, because the peril may happen even tomorrow. So, today is the right time to take a policy. So, at an early age, one has to take a policy. Then e-sales. E-sales refers to the sale of insurance products through insurance brokers, bank assurance, individual agents, internet. E-sales means policies sold online or policies sold through the internet, and ABC are nothing but indirect marketing. Indirect marketing through insurance brokers or bank assurance or individual agents. So, e-sale refers to sale of insurance products through internet.